Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A third bearish black crow yesterday and a suitable follow-on from the previous session's bearish closing black Mariboso and earlier outside day and bearish Harami. However, the most notable feature was how it was the first clear close below the purple lower time, currently 110.53, the late June to very early August bullish Andrews pitchfork. Prices did move further down towards the bright red, slowly declining head and shoulders neckline extension of the July 2017 to November 2018 move, currently at 109.89, but for now avoided testing it. So far today, a reactionary move back up, testing the now overhead breach lower time, but not really pushing up over it at the moment. Cable, aka sterling against the US dollar. A lower but indecisive spinning top pattern yesterday after the previous session's second bearish black crow and lower earlier key reversal down and bearish engulfing pattern. Overhead, we now have the December 2020 low 131.33 as well as the July 2023 high at 131.43, whilst below we have the July this year high at 130.44. Overall prices are in between the overhead dark blue middle time, currently at 132.10, and a dark blue lower time below, currently at 129.30, the bullish Andrews pitchfork for the late June, early August move. I've been asking the following question over the last few sessions. Has the move over the last few weeks developed into a bullish halfway hesitation or a double top? I do not think we have an answer just yet, but we are closer to one, and it is veering towards being a small double top, even Adam type, possibly on the edge of being a horn top. We just need that confirmation. And so far today, a small move higher, though still under the congestion at 131.33 and 131.44 before a pullback towards where we have opened. Euro sterling. A day of justs yesterday. A key reversal down, but only just, and also a bearish engulfing pattern, but again, only just. This after the previous session's indecisive doji cross and earlier key reversal up. Prices are nevertheless still within the broken, possibly repaired, recent August base descending wedge pattern, currently 84.02 to 84.52. The base of the slow, gradual, recent move back up is the congestion 84.05, dating from August 2022, with further congestion below from the same time period at 83.86, which was responsible for July's low at 83.81. Meanwhile, overhead, beyond the upper trend line of the descending wedge pattern, we have the April 2021 low 84.70 and a flatlining green short medium moving average currently at 84.65. We are seemingly trapped right now within this large June to July sticky congestion zone between roughly the April 2021 low above us at 84.70 all the way down to the 2024 low at 83.81. This zone is not specifically defined, so if prices do move, well, you may find some places with little or no support and others with a lot. So far today, a reactionary move back up with what is looking like an immediate countering bullish double right now. US dollar against the Japanese yen. An immediate countering bearish harami yesterday after the previous session's bullish piercing line pattern. Prices have seemingly now established themselves below the dark blue lower time, currently at 143.77 of the December 2023 to early August 2024 bullish Andrews pitchfork. The question now is whether they will revert back up and repair the damage or not. Below, we still have the bright red lower time, currently at 141.81, of the shallower bullish shift pitch fork for the same move as the bullish Andrews pitch fork. Yet again, continue to ponder as to whether this market has maybe reached a decision time. Now, my initial thoughts a few days ago had been yes, then some indecision, with perhaps now yes again. You see, as I said earlier this week, about last week, we had a weekly key reversal down there, and this should not be ignored. Now, so far today, a move down straight from the open, down through the bright red lower time and the August 2024 low at 141.66, but halting just before the next support, the lesser Fibonacci line at 140.48, that helped create the low of 140.24 in December 2023. This now revitalizes the big picture question as to whether the action since the high in July to date is a bearish halfway hesitation. Now, one day on its own does not make a big move such as this, but with a new low for 2024, it certainly brings it to the fore. Thus, I'd better give at least potential now, if not a target below, for such a pattern. This would be down in the 131 even zone, possibly as far as the 129 even zone. Yes, that far down, but it's still just a potential right now. US dollar against the CNH, the offshore Chinese yuan. A bullish closing white Mariposa yesterday, as well as a third bullish white soldier. However, the most important features were this being a second clear close up and out of the dark blue August to date bear channel, currently at 703.46 to 710.45, and an attempt to exploit the move higher out of the late August to early September based horn bottom. Interestingly, the base of the action was on the lesser Fibonacci line at 711.61, with prices running out of steam on the upside in the congestion found in August. Further up, we have the recent lesser Fibonacci line at 716.22, and then obviously the 50% Fibonacci line at 719.06. Now, so far today, a strong reactionary move lower, below the congestion around the lesser Fibonacci line at 711.61, and pressuring for a while the top of the breached dark blue upper bear channel line. However, prices have since retreated back up, just around or over the lesser Fibonacci line at 711.61. This has nevertheless set us up to make today a possible key reversal day. Thus, if we close tonight, either over 713.49 or under 711.97, then we'd be on. Anything in between will have a lesser outside day. Right now, well, we were looking at a key reversal down, but I suspect we may still move into what is now an outside day soon enough. US dollar against the Mexican peso. An immediate countering bullish engulfing pattern yesterday after the previous session's bearish harami. The culprit for this countering move was, as usual, a combination of dark blue lower time, currently at 20.0112, of the very acute early July to mid-August bullish Andrews pitch fork, as well as, I suppose, to a lesser extent, the often previously mentioned congestion band between 1987.56 to 1991.31, containing the December 2022 high at 1991.31. Additionally, it was the highest high close since October 2022. I'd also like to include, just below all these, the rising bright red middle time, currently at 1978.21, of the mid-May to mid-July bullish shift pitch fork, though I'm not sure how much a part this may have played. Further up, we have the October 2022 high at 2017.20, which so far has not yet been tested, though it had been previously approached. Now, beyond that, there is relatively little until the September 2022 high at 2057.65. To my mind, there is still a question outstanding as to whether the mid-July today action is a bullish halfway hesitation or a double top. Right now, I am more sided to the idea of a bullish halfway hesitation, but it all depends on how well the supports from the dark blue lower tine and the bright red middle tine, how they fare against any altitude sickness this market may develop in the next few sessions. And so far today, a move higher from the open almost to last week's high, but then a turnaround punching down through the August 2024 high and more importantly the dark blue lower tine, though holding short of testing the congestion between 1987.56 to 1919.31.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.
Thank you.